Hello, everyone. To our old friends, welcome back. To our new friends, welcome to the webinar on fraud and scams in the COVID-19 economy, what advocates need to know. My name is Linda Williams. I am a community outreach and training manager with Consumer Action. And on behalf of the entire staff at Consumer Action, welcome. I am so excited about the conversation we're about to have today on fraud and scams in a COVID-19 economy, with the operative words being COVID-19 economy. Now, before we get started, I have a quick question for you, a teaser, if you will. Is it true or false that people, consumers over 70, are the most frequent victims of scams? Is that true? Nah, that's false. While scams are often thought of as being targeted at older consumers, recent research suggests that younger consumers under the age of 30 are most likely to become victims. 40% of consumers aged 20 to 29 indicated that they lost money in fraudulent schemes in 2017 compared to only 18% of consumers aged 70 or older. In fact, a recent Fox report that teenagers, check it out, teenagers are falling to scams faster than their grandparents. The biggest rise in romance scams was among consumers aged 18 to 29. How about that? But as you would hear today, scams target people of all background, ages, and income level. All of us can become a victim of scams. Scams succeed because they look like the real deal, the real thing. They catch us off guard when we are not expecting this, and if we're struggling, it's like we are grasping for straws and when we reach for a scam. But here's the deal. Regardless of how many times you hear that this COVID-19 is recovering, you know that there are individuals in the communities that you serve, that you go to war for every day, who are unemployed, housing and food insecure, struggling to pay their bills, and the last thing they need is a scam. Why? Because it's not only going to hit them financially, but it's also going to hit them emotionally and mentally. And in the middle of COVID, that's all they need. So let's learn some things together about the trends of scams in 2020, how to recognize, avoid, and defend against these scams so that we can take this information back to the communities that we serve. Leading discussion today is Monica Baca. She is the Associate Director of the Division of Consumer Response and Operations at the FTC. Also joining us is Lauren Sanders. She is the Associate Director of the National Consumer Law Center, and Dr. Anthony Percanis. He is a professor of psychology at the University of California, Santa Cruz. So buckle up because we bring in a fire today. Now, before we get started, before I get too excited, we need to go over a few housekeeping items. As the announcer stated, when you join the webinar, you are in listen only mode, but you can use the question function on the right of the screen to type in your questions. We love hearing from you, so at the end of all presentations, Outreach Trainer Nelson Santiago is going to facilitate a question and answer segment. This is where we get to hear from you, so please take a minute, find that function so you can send Nelson a ton of questions. This is a 90-minute webinar and it is being recorded. You receive a link to the recording as well as the PowerPoint slides used today, along with a few handouts, no later than tomorrow afternoon. AFC professionals, the code word to claim your 1.5 CEUs will also be included in that link that you will receive tomorrow. At the end of the training, you will receive a survey about today's webinar. We value your feedback as we work diligently to improve our service to you. So if you have a comment, a suggestion, or even a compliment, we would love to hear from you. So please complete the survey. You will also receive as a bonus a certificate of completion for attending today. Now, before I go any further, I would like to take a moment to thank our sponsor and to update you on what's happening at Consumer Action. This webinar is being presented as part of Consumer Action's COVID-19 educational project with funding by Chase. So it's a very special thanks to Chase for giving us the opportunity to reach so many of you, all 600 of you today. Thank you, Chase. So some of you who may be new to Consumer Action is wondering, what do you do? What do we do at Consumer Action? Well, it's the states there on the screen. Through education and advocacy, we fight for strong consumer rights and policies that promote fairness for all consumers, but especially marginalized and underrepresented communities nationwide. At Consumer Action, we are extremely proud of all of our work, but we are especially proud of our COVID-19 educational project. So when you're on our website, you see that little maroon color link in the middle, just click on that and you will land on our COVID-19 educational page. There you will find resources that you can share with your client community that will help them navigate this COVID-19 financial crisis. Click on the words webinars and you will land on our YouTube channel where you can review some of our past and very popular webinars. Click on the words fact sheets and you will find a variety of topics that you can share with your clients. We have fact sheets on identity theft and account fraud, which is running rampant now, fair housing rights, estate planning, financial help for undocumented workers, just to name a few. So go to www.consumer-action.org/COVID-19 to learn more about our resources. So now let me take a few minutes to review the agenda with you so you'll know where we're headed today. At Consumer Action, we believe in making learning fun. So we open up each and every training by testing your knowledge on the training topic with our most popular game, How Much Do You Know? Today we have three true or false questions. All are related to fraud and scams. Following the game, I will introduce you to our guest professionals in the order that they will be presenting. Then Nelson Santiago will come on and he will lead the question and answer segment. I will come back, tell you how you can donate to Consumer Action, and we will wrap up. So let the game begin. Let's get started with the game. This is how the game is going to be played. We have three questions. All are true or false. I will read each question. You will use the poll, the question function to answer each question. Once the poll is closed, we will take a look at the results. I will tell you if the statement is true or false and why. At the end of the game, the person with the most correct answers, he or she walk away with the bragging rights to say it with me. How much do you know? So are you ready? Let's roll out that first question. Okay, so in 2020, over 105,000 consumers aged 65 or older were scammed and lost on average $9,175. What? Is that true or is that false? In 2020, over 105,000 consumers aged 65 or older were scammed and lost on average $9,175. Is that true or false? Okay, let's close the poll and take a look at the results. Okay, 87% thinks it's true. 13% thinks it's false. Well, actually, that's true. According to ABC News report that was issued in July 2020, senior citizens lost almost $1 billion in scams last year. Wow, that's a lot of money. Okay, you're doing great. Let's move on to the second question. According to a new report by the FTC, consumers lost 770 million to social media scams in 2021, up 18 times from 2017. Is that true or false? Consumers lost 707 million to social media scams in 2021. Is that true or false? Don't overthink it. Okay, let's close the poll. 3% is saying 770 million is just too much. 97% thinks it's true, 3% thinks it's false. Well, 97%, you are actually correct. That is actually true. Scammers, it appears, have clearly found that social media is one of the best places to commit fraud. We will learn a little more about social media scams later on in the webinar. You're doing great. Let's roll out the last question. Okay, in a romance scam, criminals use the illusion of a close relationship to manipulate and steal from their victims. Is that true or false? In a romance scam, criminals use the illusion of a romantic or close relationship. I love you. I love you so much. Send me $500 to manipulate and steal from their victims. Is that true or false? Okay, let's close the poll. Take a look at the results. Wow, 98% says it's true. Only 2% think that's false. Actually, that is true. According to the same ABC News report that was issued in July 2021, that is true. Romance scammers will send genuine, caring, and believable. Like I said before, they make the scams appear as if it's real, and that's how they get us. Okay, thank you. Thank you so much for playing the game. I hope you enjoyed it. Now, are you ready to discuss some fraud and scams? Let me introduce you to our speaker. Our first speaker is Monica Vaca. She is the Associate Director of the Division of Consumer Response and Operations in the Federal Trade Commission Bureau of Consumer Protection. This is the division of the FTC that hears from consumers across the country about problems they experience in the marketplace. It is also the division that manages and provides law enforcement access to the Consumer Sentinel network and delivers refunds to consumers resulting from the FTC law enforcement actions. Between 2002 and 2016, Monica litigated or supervised litigation against companies and individuals the FTC charged with engaging in fraudulent or deceptive practices. Monica began her career by clerking for the Honorable John F. Grady in the Northern District of Illinois, and later by serving as an Equal Justice Fellow at the Legal Assistance Foundation of Chicago. She's a graduate of Northwestern University School of Law, where she graduated cum laude, and she also is a graduate of the University of Virginia. In 2011, she received the Wasserstein Fellowship from Harvard Law School Office of Public Interest Advising. And we are very honored to have her with us today. Welcome to the webinar, Monica. We're also honored to have with us today Lauren Sanders. As someone who grew up in legal services, I've often heard her name, and I've admired her work since I started my career in legal services. She's an associate director at the National Consumer Law Center, and she manages the Washington, D.C. office where she directs NCLC's federal litigation and regulatory work. Lauren is a recognized expert in various areas, including small dollar loans, fintech, prepaid cards, credit cards, bank accounts, and consumer protection and regulations. Didn't I tell you we were bringing a fire today? She is the lead author of Consumer Banking and Payment Law. She contributed to the Consumer Credit Regulations, and she's authored several reports and white papers. She previously directed the Federal Rights Project of the National Senior Citizen Law Center. She was a deputy director of litigation at Bethesda Legal Services and an associate at Halls and Phillips. She graduated magna cum laude from Harvard Law School and was an executive editor of the Harvard Law Review. She holds a master's in public policy from Harvard's Kennedy School of Government and a BA from Stanford. Welcome to the webinar, Lauren. Also with us today is Dr. Anthony R. Pacanis. He is a researcher. He is a researcher, an author, a consultant, a media commentator, and a professor of psychology at the University of California, Santa Cruz. He is the author of several books and have published research paper in scientific journals on topics such as social influence, fraud, terrorists, and dictator propaganda, marketing, and consumer behavior. He has been a consultant for civil groups, government agencies, regulatory organizations, law enforcement, and the United States military. He has given expert testimony in many trials and is often cited in mainstream news media. In 2004, he received an Excellence in Teaching Award and was named the most revered professor by the psychology class of 2005. He published a very compelling scientific journal that asked the question, can the science of social influence be used to stop economic fraud? Please join me in welcoming Dr. Pacanis to the webinar. We are honored to have him. Now, without further ado, I'm going to turn the presentation over to Monica so we can learn some more about the FTC's fraud reports. Monica, you have the floor.
Thank you so much, Linda, and thank you to Consumer Action for inviting me to address your distinguished groups here today, and it's such a privilege here to be with Lauren Saunders and Anthony Pacanis. Thank you so much for inviting me. So I'm delighted to be here, and I'm going to be covering information about frauds and scams that have proliferated during the last couple of years. I'm going to take a particular emphasis on 2021 because, of course, this is the year we just closed out, and just this morning we announced the new data that we have compiled from 2021. So without further ado, let's go ahead and begin. And I'm going to start with, where does our data come from, and how do we know what I'm about to tell you? So this is the slide that says reportfraud.ftc.gov, and this is the site where people can report to the Federal Trade Commission problems that they experience in the marketplace. People tell us about the frauds that they encounter, how con artists got their money, how they were contacted, and lots of other details. They can report in English or in Spanish, and all of these reports go into a database called the Consumer Sentinel Network, and that is the source for the information I'm going to talk to you about today. If we move to the next slide, you can see that we also get information. Besides getting information directly from the public, we also get information from what we call our data contributors. And these are other federal, state, local governments that collect data themselves or collect information from consumers. It's information that comes from the Better Business Bureaus. They all contribute their consumer data to the FTC's Sentinel Network. Nonprofit organizations contribute, like the AARP Fraud Watch Network. And we even have some companies that contribute. Some of them are under order to contribute that data so that we can have a better picture of what it is that is happening on their networks. So what you'll see here is that this is a lot of information and a lot of organizations that share with the FTC about consumer problems. And that means we have a pretty rich set of data to learn about how consumers are being harmed in the marketplace. And we share that information with you, with the public, and we share it with other law enforcers. And the point of this, number one, is to make sure that we can be magnifying the voices of people who have experienced frauds and other consumer problems, number one. And then number two, it's so that the law enforcers who are members of the Consumer Sentinel Network can bring cases. And we bring lots and lots of cases every year. And I'll talk a little bit more about that later, but I do want people to know that when they file reports with the FTC or with any of these organizations, they don't just go into a black hole. They are meaningful uses of this information. Okay, let's move on and let's go ahead and get started with the overview of consumer reports. Okay. So what you're looking at here is sort of a big picture. This is what we have learned in 2021. We received 5.7 million reports about consumer problems. And these are not just fraud problems. These are all kinds of consumer problems. You'll see that the number one category of reports that we got was about identity theft. And that is something that I will just point out, because it was number one, was largely driven by some pandemic-related stressors, and that is unemployment and unemployment insurance. And in 2020 and into 2021, we saw lots and lots of identity thieves stealing people's identities to claim their unemployment insurance benefits. And that was really what is driving that number one report there for the identity theft problem. Another data point here that I want to focus your attention on is, and it's sort of at the bottom of this graphic, you'll see there were $5.9 billion in reported fraud losses. That is a huge, huge number. And it is substantially higher than the number that was reported to us last year. We do get new data contributors, so that does sometimes increase the number, but this is a really, really significant increase. It's as much as 70% higher than it was last year. And that's something that I really want people to focus on, because these are very, very costly scams. And then, what does fraud cost an individual person? Right next to that $5.9 billion figure, you'll see that it says a $500 median loss. And that's the individual cost. So what we're talking about when people report a fraud, the median number is $500 lost for an individual. Okay, so let's continue and let's go on to the next slide, which is actually a continuation of this broader overview. And I'm going to start with the data about younger people and older people and some of the things that we think about and the perceptions we may have about who is losing money to frauds and scams. This is interesting, and I'm glad that Linda picked it up in the initial game there and in the initial question. We do see different age groups being affected in different ways, but it's not necessarily in the ways that you might expect. We did a study a couple of years ago, well, actually it was several years ago at this point, and it was really just about consumer perceptions. And most people said, when they were asked to identify who are the people who are most likely to be victimized by a scam, almost everybody said someone older than them. Someone older is somebody that they expected to be targeted by a fraud. But the data actually tells us something a little bit different. So when we look at our data, one thing that we notice is that older people are really good at recognizing scams, avoiding them, and then reporting it. So they're doing everything right. They're recognizing them, avoiding them, and then reporting it to the FTC. And that means that when they do report frauds to us, there are a lot fewer of them who are telling us that they do lose money. So a lot fewer of them are telling us that they do lose money. Compare that with the younger folks. The younger folks are reporting to us at a much higher rate. More than 40% of them are telling us when they report a fraud that they lost money to that fraud. So that is a very significant trend, and it's something that definitely people should pay attention to. And when I say younger people, I'm talking about people in their 20s here, but they are not the only age group, and we'll talk a little bit more about that as we go. So the caveat that I will place to all of this is that when older consumers do lose money to fraud, they tend to lose a lot more. So you'll notice in those bar graphs that I have there on the right-hand side, it's broken out by age group, but you'll see that the folks who are in their 80s or older tell us, well, when they have lost money, it has been more than $1,500. That's the median amount. So that is really significant and an important lesson in just, remembering that we do need to talk with each other about fraud because any one of us can be a victim. Or can lose money. Okay, the next thing is imposter scams, and we're going to return to this theme a couple of times here. But take a look at the $2.3 billion in reported fraud loss. That's enormous, and that's bigger than other years that we've had. But also, what about that individual loss? That individual loss that we talked about sort of more generally for all frauds, remember it was $500. For imposter scams, it's $1,000. So these are scams we have to pay particular attention to. And I will also just say one other thing. What we are capturing here is what people have reported either to the FTC or to one of our data contributors. Most fraud does not get reported. People do not want to say that they have lost money to fraud. And so what we're looking at here in some ways is just the tip of the iceberg. Okay, let's go on to the next slide. And the next slide is an overview of the report types. The types of reports, the top fraud categories for 2021, and you'll see the top 10 fraud categories on your screen. So, all right, number one, we already know this. It's imposters. I just told you that a moment ago. And you can see if you look across the slide there what the scope of the harm is, and you'll see that the harm, it's not just the greatest number of reports, it's the greatest aggregate dollars lost. The biggest aggregate dollar loss is to imposter scams. But if you take a look at some of the other categories there. You'll notice that if you look all the way over to the right where it says median dollar loss, you'll see that there are some scams that cost people more money. And the ones that cost people the most money in 2021 individually cost people money were the investment-related scams, the foreign money offers, and fake check scams. And I'll tell you that was mostly fake check scams. And then also the business and job opportunities. And the common theme there is that these are the types of scams that are offering people a way to make some money. So we're going to come back to that in a little bit, but I just wanted to point that out before we leave this particular slide. All right. And let me say one more thing about imposter scams. Let me tell you what we're including in that. We're talking about government imposters, business imposters, technical support scams, romance scams, and what we call family and friend scams. And these you can think of as kind of like the grandparent scam where, somebody is approached and they may be called and told that their grandson or granddaughter needs to be bailed out. So those are what we call the family and friend scams. Okay, let's move on to the next slide, business impersonator scams. So in 2021, we saw a lot of growth in business impersonator scams. And we think that a lot of this is related to being home during the pandemic and the shifting marketplace and the way that we are changing the ways that we shop. So we have seen, for instance, that impersonators, these scammers, are doing a lot to take advantage of the fact that they know people are doing a lot of online shopping. And so who are they impersonating? Well, they're impersonating Amazon and other tech companies as well. I mean, there's lots and lots of companies being impersonated, but I focus on Amazon here a little bit because it is so huge. We did have so many people telling us in 2021 that they were being targeted by Amazon impersonators. And I think of myself, and just the amount of shopping that I do online and why some of these scams work. They work because so frequently we are shopping online and we do have a package from Amazon that is supposed to be delivered. So when we get messages to our phones, text messages, emails, calls about suspicious activity or unauthorized purchases, that tends to get our attention if it's related to a company that we've been doing business with. So here's how the scam sort of rolls out, is you will get one of these messages, but when you call the number, a Sony Amazon representative tricks you into giving them remote access to your computer or to your phone. Supposedly it's to fix the problem, and it supposedly is to give you a refund. But then they tell you that they added in a couple of extra zeros. They keyed in a couple of extra zeros, and there's too much money that they have refunded you now. And they tell you that they need you to return the difference. So some people have told us in their reports that the so-called representative, the scammer on the other end of the phone, even begged for help, saying that they're going to get fired by Amazon if the money isn't returned. Of course, the person doesn't really work for Amazon. The person is a scammer. But to make their lies about refunding that overpayment more believable, some scammers have even accessed people's online banking accounts, and they have been able to move money from one account to the other. And then when people see a large deposit in their checking account, they think that's the refund, but it's all fake. And if they send the money as they have been requested to do, they end up sending their own money to the scammer. So we have seen a large proliferation of those types of scams. And I always just tell people to be very cautious about paying attention to any text messages from people who claim to be from Amazon, and certainly any phone calls. Go to your own account and verify what it is that has been has been transacted on your account rather than responding to any of these text messages or phone calls. Okay, let's move on to the next slide, which is about income scams. So we have, as I mentioned, investment-related frauds are a close second for aggregate losses, but they are also the highest median loss. So that's the individual loss. And this is happening with all age groups. And again, that number, that amount of money that people are losing on these investment-related frauds is about $3,000 per individual. Fake check scams, it's about $2,000 of that individual median loss. And business and job opportunities, again, is also about $2,000 in a median loss. So this is something that we are very, very concerned about, and it's something that we have seen during the pandemic as a hook for people to get consumers to call, right? They may say, or to engage with them. They may say, look, you don't want to go to the office. You would like to have a job working from home, and I'm going to show you how to do that, how you can make a legitimate income working from home. We've brought a number of cases at the FTC against organizations that are purporting to tell people how to engage in day trading or how to make money with an online business. And these are very, very concerning. They tend to cost people individually a ton of money. I'll refer you to one law enforcement swoop we brought called Operation Income Illusion, and that went after the universe of these income types of scams. Okay, let's move on to the next slide. And the next slide is fraud reports by payment method. So I told you at the very beginning that the information that we get from people when they report scams, we try to get a lot of detail about how people, how the scam progressed, what the experience was. And if you take a look at this is aggregated data. And on the left-hand side, you'll see the number of reports that we received. So these are fraud reports where people told us that they lost money and the ways that they paid. On the left side, you'll see the number of reports. On the right side, you'll see the total dollars reported lost. So you can see that most people reported that when they paid for a fraud, they paid with a credit card. That's the number one payment method reported. The good news about paying with a credit card, and I think Lauren will go into this, is that you have a lot more fraud protections if you pay with a credit card. So that's sort of the silver lining here, is that you do have those protections. But let's look at some of these big dollar losses. And some of it is fairly surprising. We see bank transfer and payments as the biggest category. The biggest aggregate dollar loss was paid with bank transfers. The second biggest was paid in cryptocurrency. And the third was with wire transfer. And when we talk about wire transfer, we're talking about wire transfer with a money service like Western Union or like MoneyGram. So these are really significant, and this is something that I want people to sort of pay really close attention to, because it's a little bit different than what we have seen in prior years. All right, well, let's talk a little bit about that cryptocurrency, and let's move to the next slide. And what you'll see on that next slide is, what does the trend look like on reports and reported losses to cryptocurrency investment scams? And you'll see that almost looks like a hockey puck. I mean, that is a dramatic change over the course of the last several years. The amount of people reporting that they've lost money with cryptocurrency. And you can understand why, right? There's a lot of buzz about cryptocurrency, and this plays right into the hands of the scammers. They claim that their claims can seem plausible because cryptocurrency is kind of unknown. It's an unknown territory for many people. And when people are online, the people who approach them about cryptocurrency investments, they can appear friendly and they look like they're willing to share their tips and their tricks. But that can really be just part of the ruse to get people to invest in their scheme. Some of these schemes are just, chain schemes, right? And they work by bringing in people who can then recruit new people to become investors. So kind of like a pyramid scheme. And a lot of people have reported being lured to websites that look like opportunities for investing in or mining cryptocurrency, but these are bogus. They frequently will offer several investment tiers. And so it looks like the more you put in, the bigger your return is going to be. Some sites use fake testimonials and sort of jargon about cryptocurrency to make themselves look credible. And they promise these sort of enormous guaranteed returns. And the websites may even make it look like your investment is actually growing. But, what people tell us is that when they try to withdraw their profits, they're told to send more crypto and they end up getting nothing back. So that is one that is definitely going around. We also saw a lot of these sort of giveaway scams that were supposedly sponsored by celebrities or other well-known figures. Again, these are people who are posing as celebrities. They're not the real celebrity, but they promise to immediately multiply the cryptocurrency that you send. Of course, what people discover if they actually engage in that is they've just sent their crypto directly into a scammer's wallet. And obviously that's horrible. One example of this is people reported sending more than $2 million in cryptocurrency to an Elon Musk impersonator. Again, just trying to trade off that celebrity name because people know and respect Elon Musk as a businessman. Okay, so that's cryptocurrency. Let's move to the next slide. I want to talk a little bit about gift cards because gift cards continue to be a huge, huge pain point for people who are targeted by scammers. And the preferred gift cards that scammers are directing people to use are changing constantly. So I want to talk a little bit about what we found most recently. But let me tell you why it is that scammers favor gift cards. So first, because they're really easy for people to find and buy. And second, because they have fewer protections for buyers than, compared to some other payment options. So the scammers can get the cash quickly. The transaction is very difficult to reverse, almost impossible to reverse, and the scammer can remain anonymous. So it's very, very easy for scammers to choose this particular method. So according to the reports that the FTC has gotten, scams demanding gift cards usually start with a phone call from somebody impersonating a well-known business or a government authority. Again, it's these impersonator scams. Many people say that the scammer was posing as Amazon or Apple and told them to send pictures of the numbers on the gift card to fix some kind of a security problem with their account. Sometimes they call these numbers security codes, but the only thing that the numbers are good for is, that's your PIN. That's the key to getting the money off of that card. So other people tell us that the scammer claims to be the Social Security Administration and said that their bank accounts would be frozen as part of an investigation into the misuse of their Social Security number. That's a lie. And the scammer tells them to go buy gift cards to avoid arrest and to help make sure that their money remains secure. Of course, it's not remaining secure. Once you take your money out of your bank account and you buy a gift card, all of your value is stored on that gift card. And when you give away that PIN number on the back of the gift card, that's how the scammer then gets that money. So that's why the scammers that's how the scammers are getting you to go buy those gift cards. What's interesting is that they don't just settle for any card. They tell you specifically which gift card brands to buy. And we have sort of seen this over the last several years, how scammers went from demanding that people buy iTunes cards, then to buy Google Play cards, then to buy eBay cards. And and now what we're seeing, and this is the slide that you're looking at in front of you now, is that Target gift cards were most favored in that time period, January 2021 through September 2021. But all these other cards are in the mix, so they can be used anytime as well. By the way, they also tell you exactly where to go to buy those gift cards, and they make up a ruse to try to keep you on the phone as long as possible, so that anybody who tries to intervene, anybody who tries to help you, they can hear that conversation and can tell you what to say back. They will frequently coach people on what to say if a cashier asks those questions. Obviously, they don't want anybody to stop the scam, and they know that these store employees are often the only people who can help. And the last thing I'll say about that is by the way, those store employees really can help. We have seen that store employees can be really, really effective at helping somebody avoid losing money to a gift card scam when they see them buying lots and lots of gift cards. Okay, let's move on. So I mentioned that bank payments and bank transfers is one way that that scammers are getting money from people, and that was reported to us in 2021. And so part of what we have built into the reportfraud.ftc site, and that's the site that I showed you at the very beginning, and we're going to return to that in a minute, is I wanted to show you that we have integrated a referral to the FBI for bank transfers. The FBI has a program called the Recovery Asset Team, and they can sometimes help get people's money back if it is reported very quickly. So you can actually report this directly to the FBI at ic3.gov. I'm going to say that again. The letter C as in cookie, the number 3, ic3.gov. You can report directly to the to the FBI a fraud that happens with a bank transfer. You can also report it to the FTC through the reportfraud.ftc.gov portal that I'm showing you, because we have integrated that referral directly to the FBI as part of our portal. Again, this is something that you need to move really quickly on, but it is possible, and the Recovery Asset Team has managed to get a lot of money back for people. It's a great program that the FBI has been running. Okay, let's move on to the next slide, and the next slide is going to be about how are these scammers getting to us. Okay, so this is one that is really, really interesting to me, because the landscape has changed so much during the pandemic. So for almost every year up until this year, I would always say that frauds usually start with a phone call, and that's still true. We still get the vast majority of reports about frauds where people lost money. And you'll see it's that 644,000 number that you've got on your screen right now. The vast majority of people do tell us that the fraud started with a phone call. But if we take a look at which frauds got the most money out of people, it's social media. It's frauds that started on social media. And so what we're seeing, and Linda referred to this in the introduction, is that these scammers are using our social media presence as a way of approaching us, as a way of pitching to us either a cryptocurrency scam or a romance scam or some other type of a scam. So you'll see that $796 million was reported lost in 2021 on frauds that started with a social media contact. So I think that that's a really significant and disturbing trend. Okay, and reports are up for every age group on those, but I want to tell you that for people 18 to 39, they were more than twice as likely as older adults to report losing money on these types of scams. All right, let's move on to the next slide, where I think we're going to get into more of this. Oops. Yes, the next slide. The next slide, reports about fraud originating on social media. Again, these reports have soared over the last 5 years. You can see the remarkable trend over 2020 and 2021. This may be because we are just spending more time on social media, and it may be because scammers are finding that it is easy. You know, there's a lot to like about social media. It's a low-cost way to reach billions of people anywhere in the world. It's easy to manufacture a fake persona. They can try to, hack into an existing profile to get friends, quote unquote friends to con. And they can fine-tune their approach by looking at the personal details that people share on social media. So scammers could, in fact, easily use the tools that are available on social media platforms to systematically target people with bogus ads based on personal details like their age, their interests, their past purchases. Those are things that the social media platforms can offer to any advertiser. So what the reports to the FTC make clear is that scammers are using this to pitch investment scams. Especially those cryptocurrency investments that we talked about. They're also pitching romance scams, and losses to romance scams have climbed in recent years to really record highs. And more than a third of people who say they lost money to an online romance scam in 2021 said it began on a large social media platform like Facebook or Instagram. That's one to really, really look out for. Apart from those scams, we're also seeing lots and lots of online shopping, online ads for all kinds of products, clothes, merchandise, anything that is being pitched on social media. People buy from these sites that are on social media, and then they never get the product. So we're seeing lots and lots of reports about that. And that's something, again, that we want people to be very, very aware of. Okay, we're back to reportfraud.ftc.gov, and I'm showing you this slide again because I want to encourage you to have your clients, your constituents, use this as a resource. At this website, click to report, report now, click that button, and you can get started on filing a report. If we go to the next slide, it says how it works, reportfraud.ftc.gov, how it works. So here's what it is. You tell us what happened. You report the scam, the company, whatever it is that you need to report. Once you're done with your report, you get some next steps. Those next steps are things that you can do, things that you can try to get your money back. In some instances, if you act quickly, you can get your money back for a fraud. It's not, it is frequently very difficult. I'll be very candid about that. It is frequently very, very difficult to get money back from a fraudster, but it is not impossible in all circumstances. And so we want to urge people to try. And when you tell us how you paid, we can feed back information to you to tell you what are your rights and what are the next steps that you can take to try to get that money back. What this site does not do, and I do want to be very clear about this, is we do not do individual complaint resolution or mediation. And so we can deliver back to people your next steps, the next things you can do to try to get your money back, which can really, really work. If you can act quickly enough, but it is not individual complaint resolution. Okay, and then what do we do with the data? Well, the data helps us stop fraud. So we take a big picture look at this data and all of this information. We share it with our law enforcement partners across the country, and we bring law enforcement cases. We find targets, we find witnesses, and we find ways to stop fraud. In 2021, we returned back to consumers. In fiscal year 2021, we returned back to people more than $400 million in money that they had lost. So, and this is in law enforcement cases that the FTC brought. So it is worth filing a complaint. It is worth getting those next steps and figuring out whether there is something you can do and what is that next step that you can take. And with that, I will conclude and pass it on to Lauren Saunders.
Great. Thank you, Monica. And then speaking about next steps to get your money back, let me turn this presentation over to Ms. Saunders. Okay, Ms. Saunders, you should have control.
Great. Well, thank you so much, Monica. So there's a lot of fraud out there, and I'm going to try to quickly talk about some of your legal rights. But before I do that, just to emphasize what Monica said about your first step is really just to complain. I'm going to be talking about some complex legal issues. You don't need to remember them all. You just need to complain, and complain to a lot of people as quickly as you can with as much information as you can. And you don't really know exactly who's going to be able to help you. The FTC's report fraud website is definitely a great first start, because they will give you some next steps. To complain to lots of government officials, and also to to the bank or the gift card company or whoever it is that was involved in the scam. And one of the reasons it's important to complain is, even if it can't help you immediately, if the FTC brings a lawsuit against the scammer and eventually recovers money, that could be years from now, then they have this money and they want to give it back to the people who were hurt, but they don't know unless you are in their database. So having complained, even if it seems like it doesn't do any good in the short run, might help you down the road if the FTC or a state attorney general or somebody else pursues that scammer. Now, I'm going to go through these slides pretty quickly because I think we are running a little behind. Don't worry about remembering it all. I will mention that we have an article on our website. Our website is nclc.org, and there's an article called Getting Money Back for Scammed Consumers. Getting Money Back for Scammed Consumers. And if you Google that, you can probably pull up the article that'll tell you some of these legal details. Okay, so let's see. Not advance. There we go. Okay, so what are your legal rights? Now, I'm talking about scams. So I'm going to assume that the consumer was scammed into sending money to a scammer. The consumer actually made the payment. They were scammed into making a payment. And that is different from what protection you have if somebody hacks into your account and takes the money out of your account and you didn't send the money to them. In general, with some exceptions, if your account was hacked, and whether that's a credit card account or a bank account or a prepaid account, and somebody just took money out without your authorization, in general, you have complete protection there. It gets a lot trickier when the consumer actually sent the money, was scammed into sending the money. And so that's what I'm going to talk about. And the rights there are different depending on how the money was taken, what type of payment was involved. So credit cards, as Monica mentioned, have the strongest protections under the Truth in Lending Act, TILA. And without getting too much into details, there's a couple of different legal categories of protections. In general, we call these chargeback rights because the charge is returned back to you, and you can complain to the credit card company if you it's called a billing error, but it's not really about billing. If there were property or services that you did not accept or were not delivered to you as they were agreed, then you can dispute that, and you have to raise those disputes within 60 days of getting your statement. The billing error disputes aren't about the quality of the goods, but it's like it wasn't delivered as it was agreed, or you refused it because it was not what you were promised. The second category of protections that you can raise claims and defenses with the credit card company that you would have against the scammer. So, if the scammer deceived you, you can tell the credit card company, hey, I was deceived and I'm not going to pay for this. And this is a defense you have to raise before you actually pay your credit card bill. But then they will, set that aside, protect you, and while they investigate. And in theory, you waive that defense if you pay your bill. In practice, don't worry about these details. Just call your credit card company, tell them as quickly as you can, tell them what happened, and they will take care of the details. Okay, next category of protections is what's called electronic funds transfers. That these are covered by the Electronic Fund Transfer Act, EFTA, which is different from the protections that you have for credit cards, which are much stronger. And the EFTA covers debit cards, electronic payments out of your account, both through the older traditional ACH system, as well as newer systems like Zelle. It covers prepaid cards, it covers person-to-person accounts like Venmo, PayPal, or the Cash App. There's a second category of regulations that cover international remittances. I'm not going to go into those. The EFTA does not cover wire transfers, whether those are wire transfers from a bank account or whether they are wire transfers that are made outside of any account, like Western Union. So the protections that the EFTA provides, it provides good protection if the transfer is completely unauthorized, if your bank account was hacked into. And it doesn't matter if you were negligent. If you wrote your PIN number on your ATM card and you lose your wallet or you were mugged, and then somebody goes to an ATM and takes out money without your authorization, well, it's not a good idea to write your PIN number on it. Maybe you were negligent, but that doesn't matter. You're protected. Similarly, if a scammer fraudulently induces you to sharing account access information, so you give them the information that the scammer uses to hack into your account and take money out without your authorization, that's unauthorized and you're protected. So for example, a scammer is trying to hack into your account. They're online, they're trying to get in, but the bank prompts them, sends a message to your smartphone, and they need that code that came by text to you in order to actually complete the hack into your account. So they call you up and they give you some song and dance about why they need that code. First of all, never give anybody who calls you that code, even if they claim you're that bank. But if you do, and then the scammer completes the hack, gets into your account, takes money out, that is unauthorized, and you have protection. And the Consumer Financial Protection Bureau, recently made that clear with some FAQs on their website, and that's the quote I have. Now, this is a situation, again, unauthorized, hacked into your account. You did not send the money. You have protection. Unfortunately, it gets trickier if you did send the money. So the EFTA's definition of what is unauthorized is a transfer that was initiated by a person other than the consumer without actual authority, and from which the consumer receives no benefit. So if the consumer initiates the payment, even if they were scammed into sending it, that's initiated by the consumer, and that does not fall within the protection for unauthorized transfers. So if you initiate a payment through Zelle or Venmo or some other system where you're told, okay, you've got to send money this way, and you actually send it, unfortunately, that's not going to be covered under the protection for unauthorized payments. And there's really, unfortunately, under the EFTA, very little protection in that situation. Unlike with credit cards, there are no chargeback rights. You can't say I didn't get what I was promised. You can't say I was deceived. Certainly you should ask the bank to investigate. You should ask for your money back. The bank might try to help you, might figure out where the money went and try to get it back. But if at the end of the day they don't return your money, unfortunately, you don't have a lot of protection under the EFTA. Now, there is a little more protection for a category of electronic fund transfers called preauthorized EFTs. And these are ones that are authorized in advance to recur at substantially regular intervals. So for example, let's say you sign up for some buying club and they're taking money out of your account every month. Okay, that's something that was recurs at regular intervals. And under the regulations, in order to take that kind of money out of your account on a regular interval, you need to give an authorization, and they have to ask for your authorization in a way that is readily identifiable as an authorization, so you realize you're authorizing somebody to debit your account on a regular basis. That authorization has to have clear and readily understandable terms so that you know exactly what you're authorizing. And if it doesn't meet that definition, then it's going to be unauthorized. Now, pre-authorized electronic fund transfers are mostly what we call ACH payments. These are just, the traditional electronic payments that come out of your account, like maybe for your mortgage or your credit card. But you could also use your debit card to authorize regular payments. So those would be EFTs that have to have these kinds of clear and readily understandable authorization before it can be considered to be authorized. So here's examples from the FTC's website of scams that might involve pre-authorized payments, where you're going to have a few more protections. Free trials, products that weren't really free, buying clubs. These kinds of things where money comes out on a regular basis. Maybe you didn't realize on a website that you were, clicked on some I agree thing to authorize regular payments that you really didn't realize. You're going to have some protection there to be able to claim that it's not authorized. Yeah, so I think I pretty much, just said what's on this screen. It's unauthorized if they didn't get the right authorization. And if that authorization was hidden in the fine print somewhere in a place you didn't see it, well, that's not going to meet the requirements, and you'll be able to say that it was unauthorized. Gift cards, prepaid reload packs. Prepaid cards, which are basically an account, those are covered by the general provisions of the Regulation E and the EFTA, but only after they're registered in your name. So if you buy a Green Dot card, for example, and register it in your name, you're going to have protections against unauthorized charges, but again, you're not going to have the protections if you send the money. Gift cards, there's really no protections at all. Your best, recourse, save your receipt, go talk to the store. There is a very remote chance if you call, wherever you bought the card, whether it's Target or Google or Apple, if you call them right away, they have some ability to see where the cards are being used. Apple, if you get a report soon enough, they might be able to stop the code from being used. It's pretty remote chance, but give it a shot. Again, complain everywhere as quickly as you can. Okay, bank account wire transfers. I'm just going to bleep over this really quickly. Again, they're not covered by Regulation E and the EFTA. There are some protections under the UCC, but they're not quite as strong because if you're scammed into giving that code, for example, there may be arguments that the bank doesn't have to pay you back. And there is no protection for authorized but scam transfers for bank account transfers. And it's pretty much the same thing for money transfers from an account. If it's an international transfer, there are specific Regulation E rules that cover them, but there's no scam protection other than just the right to request information about the transfer and where it went. There's no Regulation E federal protection for domestic transfers. There are some state money transmitter laws that apply, but they don't have scam protections. The FTC's telemarketing sales rule does prohibit telemarketers from asking for these kind of cash-to-cash transfers, but it's not going to help you too much. So the rest of this I'm going to go through really, really quickly because I think we're running short on time. We've heard about check scams. The way they work is, you get some sort of check that you deposit, and then they tell you to keep part of it and pay the rest out. These are not covered by the EFTA. They're covered by the UCC, and then it turns out the check later bounces. So after you send out part of the money, it bounces quickly. And the bank basically has the right, even though it looks like the money is in your account, they have the right to take that money back later if it turns out that the check bounces. And there's not a whole lot of protection that you have. If the bank was negligent in what they told you, what they represented to you, they might have a harder time recovering from you if there's a negative balance in that account. few more protections if the bank is trying to pursue you than if you're trying to get the money back from the bank, but not a ton of protections. The only case law that really helps consumers in this area is if the bank actually told you that the check had cleared. You say, okay, I don't want to pay this money out until this check clears. Then you might have an argument vis-a-vis the bank. But the mere fact that the funds are available in your account, available to be spent, is not the same thing as the check being cleared. In most of these cases, the banks win, unfortunately. So with that, sorry if that was really quick. Again, there's more on our website, and I will let Dr. Preauthorized take over.
Thank you, Ms. Sanders. Let me turn it over to Dr. Preauthorized. You have control.
Thank you, Linda, and I want to thank everybody who's on the call today for all the work that you do in your communities, the backbone of many great things for our country. What I want to do today is answer a simple question: how do fraud criminals enact their crime? How do they carry it out? And let's see if I can get the And in answering that question, before I answer, you probably wonder, well, what's his source of knowledge? So in answering that question, we've done a number of research projects. This is with the AARP primarily, where we've done things like multiple surveys of victims. We've looked at victims off of call lists that we get from criminals, and then we match them. We've also looked at undercover fraud tapes, fraud criminals in action, to see how they operate. We also have a reverse boiler room, a call center that calls and warns people about the fraud. And in our experiments, we would then call them up a few days later and try to take them in a fraud to see what messages worked and didn't. We've developed and tested fraud prevention seminars and counter-influence campaigns. We've looked at the history of case studies of fraud criminals. And for me, I'm an experimental social psychologist by background. So we've taken some of the tactics that fraud criminals use, and tested them out in experiments to see how they work and why they work. So what I want to do is answer the question, how do fraud criminals enact their crime? And the myth is, and Monica and Lauren both alluded to this, is that fraud victims are stupid, naive, gullible, greedy, lonely, elderly, have something miswired in their brain, somehow morally or intellectually deficient. Monica alluded to an FTC study about the perceptions of the crime. There's something wrong with that victim, is why they fall prey. That's a myth. It's not true. The reality is victims come in all shapes and sizes. And instead of it being about the victim, it's about the con criminal, establishing a powerful situation using social influence and actually tailoring a pitch to fit that victim to find their Achilles heel and to enact their crime. What I'm going to do is I'm going to discuss the first part, why that myth isn't true, and then we'll have a homework project where you'll get to see how the weapon of fraud, social influence, is used. So what I'm going to do is splice throughout this talk fraud fighter takeaways. And so I have two for this slide based on what I just said. First of all, believing that myth about the victim being somehow deficient and ignoring the reality that it's about social influence and persuasion as the weapon in the crime has two basic issues with it. First, the belief that fraud victims are somehow inferior or lacking is a key component of blaming the victim. You look at the Hollywood movies, they romanticize the con. Very often times they don't portray the damage to the victim. And that belief that they're inferior is blaming the victim. In turn, this has a problem. It actually increases the likelihood of fraud and the cost and damages of the fraud. So this blaming the victim means there's something wrong with that individual. It got taken. Nothing wrong with me. It can't happen to me. That false belief actually opens you up to more victimization for yourself. As a matter of fact, fraud criminals want to establish that in your mind. We'll talk about that in a little bit. The likelihood of this victimization increases because if you think it can't happen to you, you don't prepare, you don't question, you don't have a plan, and the con criminal can play off of it. This blaming the victim also reduces reporting of the crime because the victim feels embarrassed. They rationalize it away. And as we know from the previous talks, the best way for law enforcement to stop this crime is to get the information fast and in detail. It also increases the difficulty of prosecution. Oh, it's a nice, clever con. He'd never do such a thing. It's the victim that was stupid. It results in lower sentencing, even attacks on the prosecution. Furthermore, it prevents needed policy. Any kind of discussion, if you ever read the comments on any kind of prevention from a don't call list to any other kind of intervention, basically it says people shouldn't be stupid. Well, that ignores the reality of the crime. And most importantly, it provides an obstacle to healing and recovery. The victim blames themselves and feels stupid, feels dumb, feels like they did something wrong, when the truth of the matter is it was the con criminal who did something wrong. So how do we know that victims come in all shapes and sizes? Well, this is one of the first studies, and this is one of the most important studies ever done in fraud. It was done a little before I got involved with AARP, and it was a 1996 telemarketing fraud survey. What they did is, for the first time, they got call list. When criminals would get captured, they would turn over who they were calling, people that they had taken in different crimes like free prize or reload or vacation timeshares and so forth. And what AARP did was they called them up and they had a matched sample. And what you find is that the myth is totally opposite. The results of this study are totally opposite to the myth. The victims were not socially isolated. They had extensive social networks. They were very active in their community compared to non-victims. Victims in the survey were also more affluent and educated than non-victims, and survey takers noted that they were very articulate and had a high degree of cognitive abilities, the exact opposite of the myth. This is consistent with the history of people who have fallen prey to crime in the past. So fraud victims have included folks like Sir Isaac Newton or Ulysses S. Grant, Mark Twain, Oscar Wilde. In the Homestake oil swindle, which ran for about 16 years from the late 50s to the early 70s, people who were victims in that crime were governors, senators, Attorney General of New York, U.S. Attorney, law school deans, and even an FTC chair who had authored a book on how to spot deceptive business practices. The same thing can be told for Theranos, for charity fraud, and as we noted earlier, younger people are much more at risk for certain kinds of crime, especially cryptocurrency fraud. The second study is one that I did with AARP. We called it Off the Hook. And again, what we did was we found both people who had fallen prey to lottery and those who had fallen prey to investment fraud. And what we did was we were looking for that victim personality, that profile. And so what we did was we asked people, well, what do you think are people who fall prey? What are they like? Oh, they're too trusting. They go along, they too conform. They allow other people to control them, external locus of control. They're easily persuaded. They lack the need for cognition and make gut decisions and rely on their intuition. What we found was, so we did the survey. We developed questions on each of these components, reliable scales that had been used in past studies. And what we found is none of them predicted victimization. Trust predicted something, and I'll tell you in a minute, it was the exact opposite to what people thought. And external locus of control also predicted not victimization, but what crime a person would be taken in. So what we found is in this study is that the scam is tailored to the victim. People who were high in internal locus of control, meaning I feel controlled, I feel like I'm in control of this situation, they were more likely to be investment fraud victims. People high in external locus of control, the world controls me, it's just the way it is, they were more likely taken in lottery scams. And you can see how this is. The investment fraud person, the person who's taken an investment fraud is in control, they're in control of their finances, and the con criminal is going to figure that out and put them in control of their investments just the way to benefit that con. The lottery victims were high in external locus of control. Well, it's all a matter of luck anyway, I might as well try. The other interesting finding we had is that the lottery scam victim were low in trust. They were the least likely to trust anybody else. This is not a typo, but it's opposite to what most people think. The little old lady who just answers the phone and trusts it. Now, the lottery scam victims are just the opposite. Everything's a scam. I'm cynical about anything. Well, who knows? This might be my time. So what we learned in this study was that con criminals tailor the pitch to the victim. And this gives you can look at this later. This gives a brief overview of the different types of victims for the different crimes. So the takeaway here is that findings from one fraud may not apply to other frauds. So for instance, if we only had surveyed lottery fraud victims, we would have concluded that fraud victims are older, less trusting, and externally controlled, and we would have been right about that, but wrong about fraud in general. So when looking at any kind of conclusions about fraud, it requires looking at multiple instances, multiple frauds. The next major study was done, and this is a very impressive study, was done by the UK Office of Fair Trading. And what they did is they surveyed victims of 15 common frauds, sweepstakes, prize, lottery, work at home. This was a self-report study, so people self-reported. But what they found was the same thing we had found in our research. And I put it in red because it's one of the more important, I think it's one of the more important findings in this. And that is, according to the UK Office of Fair Trading, our research dispels the myth that only the vulnerable, elderly, or naive are taken in by scams. Anyone can be taken in because scams are customized to fit the profile of the people being targeted. There really is a scam for everyone. Oops, I went too fast. So here's our second takeaway. Here's some other fraud fighting tips. The UK Office of Fair Trading finding, I believe, is the single best summary of victimization, and the one that should be shared far and wide. Oftentimes you hear people say, no, I would never fall prey to that. You know, they see this fraud on television or in the movies. Oh, they're really stupid. I'd never fall for that. Well, maybe so. Maybe they're right. That scam may not be tailored effectively for that person. That doesn't mean that a scam could not be tailored to that person. He or she just got lucky this time. I have a friend and a colleague that I work with, a magician, Apollo Robbins, who is his magic character. He plays a pickpocket, the gentleman thief. He did one of these reality TV shows, you know, where you sit like a real hustle kind of show. And so people ask him, well, how do you pick the person that you're going to take? How do you find who you're going to pickpocket? How did you do the scams on TV? And he says, the person I'm looking for is someone who's breathing. In other words, but for the grace of God go I, we can all be taken. So there's additional evidence for the tailored pitches. We looked in our research, we look at call and lead sheets. So the con criminal will basically develop a profile of individuals. They may have an intake scam that they use at first. They have maybe junior people working off scripts, and they'll record personal information. Like, what do they like? They're a Seahawk fan. What are their members? They were a former teacher. And they'll also record failed pitch attempts. And based on that information, they'll actually say, well, let's try pitching them on this scam instead. When you look at the history of con criminals, you'll see that they interview their potential victims and look for clues. You know, one con that we studied put it this way: if you say you're a veteran of World War II, then I'm a veteran of Desert Storm. Specific cons look for specific characteristics. So for instance, one con would look for desperate people. He would do loan and advance fee scams. Others may look for affinity groups, like in the Miracle Car scam, where they looked at gospel believers. And in summary, they would, of course, this is a little summary from the end here. George DeVole, in his book, 40 Years a Gambler on the Mississippi, he was a guy who ran the 3-card Monte on ships. He said they, of course, would not bite at the Monte bait, for it was too stale for them. So I would study, sometimes for hours, how to take the conceit out of them. A good summary of tailored pitches. I'm going to skip this. I'm just going to go to the homework assignment since we got about 2 minutes before we need questions. So if it isn't about the victim, what is it about? And what the con criminal does is mimic what we do every day, look for the social norms that guide our behavior, and use powerful social influence tactics that are based on our human nature to enact a crime. This is a list of these. I'm going to tell you how to find out more about them. But they basically, these influence tactics basically appeal to our human nature. We reciprocate gifts. If somebody does us a favor, we do them back. We use storytelling as a way to communicate information. We have certain social roles, like that we live in our daily life. The con criminal will come in and mimic being an authority, or being a friend, or being a humanitarian, so forth. So you can find out about these. You'll get the PowerPoints after the talk, but at the bottom of this slide, there's a link to a YouTube video. And that YouTube video is about 12 minutes, and you'll be able to watch the con criminals in action. It'll consist of examples of these influence tactics, and also commentary by me, but also by the fraud criminal and the victims involved, what they were thinking and experiencing. And this will hopefully communicate to you that how the fraud criminal is working. We'll skip that. Let me just end with my final takeaways. When we understand that social influence is used as part of the crime, and recommend showing this video to people who have been victimized, and also to those who, in general, becomes an important part of understanding how the fraud works. Gives a sense of grift sense. When I see these influence tactics, it should become a red flag to alert me. Second, when we understand the value of social influence and understanding this crime, it can be a key ingredient to healing. Lots of victims think that they're to blame, that I did something wrong, that I was foolish here. And that blaming the victim myth of that blaming the victim reinforces that self-blame. But he's looking at what the fraud criminal is doing. It can help as a first step to healing. It's also useful to explain the crime to audiences who might be blaming a victim or admiring the con criminal as a cunning person. For instance, juries, or when we go to enact policy and don't see the criminal for who he really is. I've run over by a couple minutes here, so I don't want to take up any more time on questioning. So I'll turn it back to my good friend Linda, who's doing an excellent job of setting these things up. And again, I'll conclude by appreciating everything that you're all doing for your community and thanking you for the opportunity today.
Thank you, Anthony, and thank you to all speakers. I know there's a ton of questions, so let me turn it over to Nelson. Nelson, do you have questions for our guest speakers?
Yes, we do. Can you hear me okay?
Hear you fine.
Great. We do have a question. It says the attendee is asking, is there any data about whether scams have increased since the CFPB passed the guidance allowing debt collection activities via text message and social media? Is there an easy way for consumers to tell if someone is texting them or messaging them on social media, whether that's a legitimate debt collector or not? And if it's too soon to have an answer for this, are there any tips for watching out for these kinds of debt collection scams, or something going on now that we may want to be on the lookout for?
Monica, you want to answer the data question?
I'll start with the data question. Yeah, I think we don't have any data that ties those two things specifically together. We do have more fraud reports than usual, but I feel like you're asking a much more specific question, and I can't tie those two things together.
I'll just say we're certainly concerned about how the new debt collection rules and the new move to electronic collection activities impacts people. We'd be interested in hearing what people are seeing. There were some improvements in the final rule. I think the original rule would have allowed them to, send you a link that you had to click on in order to, get information. And, I think some of that stuff was gone in the final rule. But there's, we certainly have been worried about the potential for scams because how do you really know the difference between a real debt collector and a scam one? I'd say the best thing to do is, if you really want to pay an old debt, go to your credit report and see who's actually, reporting on your report, and contact them directly, and don't respond to somebody who's, reached out to you if you're not sure who they are.
Great, thank you, Monica and Lauren. Another question is, a couple of you mentioned the importance of complaining quickly. And one of the recommendations was complaining also to the FBI. And the question is, how quick is quick? Or do you have some examples of when people were able to get their money back because they did complain quickly?
Yeah, sure. So a couple of things. One is that bank transactions take a few days to clear. So, but they do clear. So you really only have about 3 days. You really need to get that report in as fast as you possibly can. So that's one where it really does matter. Another one where it really matters is that sometimes people send cash, and they might mail it, or they might send it through FedEx or something like that. Those packages, while they are in transit, can be tracked and pulled back if you can get there in time. And we've got lots and lots of examples of people being able to do that. So frequently, we hear this a lot from people who deposit the package in the mail, and within moments after putting it in the mail, they become convinced it is clearly a scam, and they realize it's a scam. But now what can they do? So our website will direct you to where you can, again, if you go through that process and file that report, at the end, you'll get the next steps, and it will direct you to the phone number to call, whether it's the U.S. Postal Inspection Service or the carrier that you used. You should definitely try to get that back. People have been able to get that stuff back.
And I should add that, sometimes you have a day or two, but sometimes you really only have seconds. If you send money through Zelle, for example, that is, a real-time payment system where the money moves in seconds. Get on, and I've heard of people who, send that money, and the minute they click send, they somehow realize that they've done something wrong. Well, that they've been defrauded, you know, call your bank immediately. Even if you can't stop the money from moving to the scammer, if the bank can immediately get into contact with the bank that, you know, where the account that received the money is, they could potentially put a hold on that money while they investigate it. With gift cards as well, you know, if they're going to try to cash out that card instantly, but you know, in the remote chance that you get through to Apple and they're able to put a hold on cashing out the card, the code for that card, you know, you might have a chance. So you got to be fast, really fast.
Thank you, Lauren. And just to flesh that particular question out a little bit more, that one issue, one of the attendees asked, what specific protection is there for a payment, say from using Zelle, in which the buyer, after receiving the goods, cancels the payment? It could take place even over a few minutes, maybe up to 30 minutes. What are the
Zelle, like I said, really, you know, Zelle is one of these payment systems where the consumer initiates the payment. And so it falls in that exception, unfortunately, to the protections under the EFTA. Now we're trying to change that. We have asked the Consumer Financial Protection Bureau to update the regulations to give, you know, consumers the ability to dispute a fraudulent payment in a system like Zelle. And importantly, the Federal Reserve Board is also developing a parallel to Zelle. It's called FedNow, and it'll operate basically the same way Zelle does. It's, you know, a way of moving money between bank accounts, but the Fed is writing the rules for it. And we've told them, well, you're in charge of the system, you're in charge of the rules. Let's give people protection that is lacking in the existing system. So those rules are under development, and, you know, we've urged, you know, again, the Fed to improve protections in the FedNow system and the CFPB to improve protections in payments more generally.
Great, so that would help. I mean, hopefully that addressed the issue, like when PayPal or Venmo tells you the EFTA does not apply here. That was one of the questions. That would help address that issue.
Yes, and again, you know, the EFTA applies to PayPal and Zelle, but the EFTA does not give you, you know, much in the way of protection if you are the one who sent the money. Now, if your PayPal account is hacked, if your Venmo account is hacked, you have protections. But if you sent the money, right now you don't have protection. But we've, you know, urged the CFPB to change that because the money is going from one PayPal account to another, and PayPal, you know, has allowed some scammer into having an account there. So we think they ought to take some responsibility.
Great, thank you. Any tips here from any of the panelists? Someone's talking about an experience that her 16-year-old had buying something on the through person-to-person platforms, the computer part. Sends the money and then they end up not getting anything back. What are the tips there? How do you buy something on these platforms? You just want to use part for a computer.
Well, my first advice is don't use those payment systems. I mean, you know, because again, you don't have protection. I mean, my son was almost, you know, scammed as well. He was renting, you know, looking to rent an apartment, and they wanted the, you know, the deposit by, I think by Venmo. And, you know, fortunately, he'd heard from me enough to know that that was a big red flag. So, you know, anybody who insists on payment through one of the systems, you know, that is probably a scam, or I shouldn't say probably. I mean, legitimate people use it certainly, but it's a warning flag. You can also use, you know, don't click on family and friends. You know, with PayPal and Venmo, there's a way, if you say you're buying a good or service, then there's going to be a higher fee that either you or the seller will have to pay, but then they will give you some protections there. It's not part of the legal framework, but it's part of what they are offering. The family and friends thing, and on the other hand, there's just not going to be any protection.
Great, thank you. And then Dr. Percanis, a lot of people are interested in the video, and I'll just repeat that you will get the slides with the link to this soon. So you'll have the link to that. And the other question here is whether there's any information that any of you may have on home title fraud. How is it done? How much of it is happening? Are there any tips for protecting yourself on home title fraud, against home title fraud?
Monica, you know what the person's referring to there?
So I have heard of these, and we definitely do get some reports about this. And this is one that's a little bit tricky because these are with the various, deed clerks in your local jurisdiction. So there are some jurisdictions that have more protections than others. I'm not sure that I don't think I have anything very specific for you, but let me get an answer for you, and I'll send that around.
Excellent. That sounds good, Monica. We can help send that around.
And I don't know if this is what the person was asking about, or this is something different, but we have heard about these scams where you're about to buy a house, you've got the money ready to send, to put into escrow, and just as the moment when you're expecting instructions about how to send that money, you get an email with instructions about how to send the money. So you follow those instructions, and it turns out, somehow the scammer figured out, who you were, and, that's a scam, and you've sent the money off to the wrong place. I think these may happen when there's like a hack on the end of the realtor, for example, and they're able to monitor email traffic, perhaps. And the best advice I'd have there is, call the realtor directly to confirm, the wiring instructions, and don't just go by, the email. And, also always check what email it actually came from, because it may actually come from a spoofed email.
Great, thank you. And Dr. Preauthorized, you might have some additional thoughts on this, or any of you. This person says they would love it if we could avoid referring to scam victims as having been scammed, as it feeds into victim blaming that Dr. Preauthorized spoke about. It's not the victim's fault. Let's talk about what the criminal stole versus using language that casts fault on the victim. Any thoughts on that?
Oh, absolutely. And, it is tricky. I probably used that phrase a couple of times, so maybe I need to clean up my language as well. But that's exactly right. For me, you look at the mass media, and there's a real popularization of and romanticism of cons. You look at the Hollywood movies, who's conning whom, as if it's some sort of brilliant innovation that they can lie and deceive. Most of these crimes don't have much innovation. They're the same scam over and over again. It's not very clever. The only thing that's unique about the criminal is that they have made a decision to treat people as objects, to manipulate and dominate them. And the flip side of that is basically the motto of, but for the grace of God go I. Any of us can become the target of one of these con criminals.
Great. And then I have another question here. Something about the Social Security Administration says I was given or gave my credit card information for $1 review. It was one of these 30-day trial type services that are or products that are given, and wondering how safe those are. She gave out a credit card number, and was simply told that in a reply that the order is being reviewed. And now I was wondering, what, is this a potential scam? Signed up for a 30-day trial. All she hears back is that it's being reviewed. What might you want to do in such a case?
Yeah, I mean, if I were her, I would cancel everything I possibly can. They now have her financial account information, which is her credit card information. So she does have the fraud protections that go with her credit card, which is really good. But free trial programs are highly problematic because people wind up effectively not even getting an opportunity to try the product that they signed up for before they get charged again and again and again. And so free trial programs are something that I would be very, very cautious of. And you have to start counting the day of your first payment, the day that you give out that financial account information. Frequently, we do see, especially online sites, charging you just that $1 or that, $1.99 for shipping and handling. And the whole point of that is just to convince you to give up your financial account information. So I would suggest that she just cancel that out as soon as she possibly can before more charges rack up.
Great, thanks so much. Any tips, and I don't know if Dr. Pratkandis or Monica, you might have more on this, when you're trying to help someone who's potentially about to get scammed, and we talked a little bit about it, especially in romance scams. I've heard cases where people are saying, are told, I'm trying to help somebody regarding a romance scam, but the person doesn't believe they're being scammed yet, or that they are potentially going to fall for some kind of a scam. What do you do when people just don't believe that this is a scam and don't want to believe it?
Well, first of all, I'll tell you what not to do, and that is lecture. You shouldn't be so stupid. You shouldn't, can't you see through this person? Because what that does is it makes, at the end of my slides we didn't get to, but the thing called the rationalization trap. I'm caught in this crime, and I'm a good, smart person. If I start to realize that, hey, I sent my money to a fraud criminal, well, what does that mean for me? It means I'm not that smart, I'm not that good, and when you have the blaming the victim, it tightens victim myth. It tightens that situation for the individual. So the first thing you don't to do is not lecture. Second thing I would recommend doing is to build up the person's sense of self-worth. In social psychology, we have a thing called dissonance reduction, where people are caught into places where they have to justify something that they might have done wrong or not the best thing. And if you help that person build up their sense of self-worth through a process called self-affirmation, talk to that person about all the good things they do, all the things they do for their community, the love of their family, help them feel a personal worth. This is starting to help them to provide a platform for facing up to the situation that they're in with this crime. The next thing I would recommend doing is it's rather than lecture, help the person discover the fraud for themselves. So for instance, gee, you're going to win a prize. How does that happen? Gee, this is great. How did this guy find you on social influence? Mom, I know a friend who, boy, they seem like they're caught up in this thing where somebody met them online. How can I help? How can I help them get out of that situation? In other words, turn the person into a fraud fighter. Put them in that role. Those would be the first line I would have. The other thing that I think is real important for fighting this crime is that when someone turns the corner on it, they're caught up in the crime, they want to rationalize that it was good to send them money, but they face up to it, they admit it, they understand it, they go to law enforcement and give them the information. We should start treating those folks as heroes, because they really are heroes. When you have to face up to something that isn't pleasant, that takes some courage and guts. And when you go into the community and help our community by turning this information over to law enforcement so they can shut down these criminals, that's a hero. Tomorrow, by the way, will be J. Frank Norfleet's birthday. He was born in 1865, and he is a model for all of us. He was a fraud victim, and he got so angry that he spent the rest of his life tracking down fraud criminals and brought about 100 fraud criminals to justice. That's a hero, where we turn victimization into being a hero for our community. So those would be the steps I would take.
That's great advice. I'll just mention a couple of others from my personal experience trying to help my uncle who was a victim of romance scams. I said, hey, I'd like to meet her. You've got, this new person in your life, let her know that I'm here. I had recently shown up in my uncle's life. The minute, this scammer realized that I was in the picture, she left. Second, I never persuaded him that he was, that this was a scam. He wouldn't let me report it to the police, but he did allow, me to talk to the bank, and I asked the bank to put a flag on his account, and in the future when he was scammed again, they caught it.
Excellent. Those are fantastic tips. Thank you so much for that. And then one last quick question, and we'll turn it back over to Linda. Monica, one person asked whether the material you presented, even the slide deck, if you've done it before, have you ever presented this, or has anyone presented this in Spanish or even other languages for other people who may be on? Is that material available in other languages?
Great question. We do have a lot of material available in Spanish, and for anybody who wishes for a presentation, please be in touch with me. We'd be delighted to arrange one.
That's excellent. Thank you then to all the speakers. I'll turn it back over to Linda.
Thank you, Nelson, and a very special thanks to all of our speakers for hanging in there to answer the questions. Once again, I'm going to tell you that this webinar is part of Consumer Action's COVID-19 educational project with funding by Chase. If you enjoyed the webinar and you would like to contribute, you can do so online by credit card or using PayPal. Just be really careful when you're using it. Make sure it's going to Consumer Action. Or you can mail a check to Consumer Action Attention Membership Given at 57 Post Street, Suite 611, San Francisco, California. As I stated earlier, the webinar is being recorded. You should receive a link to the recording no later than tomorrow afternoon. AFC professionals, your code word to claim your CEEs is fraud and scams in a COVID economy. When you receive the link, please subscribe to YouTube. It's free, and it would help us continue to bring you these great webinars. Again, a special thanks to our amazing speakers. You rock. Please join me in sending them the love. We appreciate you being here. You've been a fantastic audience. Before I leave, though, I noticed that a lot of you are not registered for the March 22nd webinar on the impact of COVID-19 on small businesses. If you're into wealth building, if you're into financial literacy, then you should be registered for the webinar. Now, I am going to close out the webinar, but one of the things that I am going to do is I'm going to start Dr. Procana's video. You can stay on if you like and watch the video, or you can come back and view it at your leisure, whichever way you like, but I'm going to start the video. Thank you, everyone, for joining us, and enjoy the rest of your day.